the dollar Swiss, we've seen that the Swiss is weakening, and again, if the euro continues to the downside, it is going to be dragging the euro with it. This here is a nice setup because we had just had a pullback from the high, which is the 92.01, and now we held at those two levels that we had, which is the 98. Let me see. I'm going to show. They're very close. I mean that, which is the 89.45, and we held about. So right now we're having this move up. This is what we call our gift trade. This is our gift trade, and that is the gift in action. So we need to be a buyer of it, and in this case we closed the week at 90.74. The high of the week is 90.85. It's about 10 pips from the high, so in this case, just to be on the safe side, I will take it out of the high long. So my buying point is above the high of the day, which is 90.85. So my buying point is 90, which again $85. And if I do, I'm going to place my stop. This is what we call, again, that's why we use the market side, James and Mike. In this case, this is, as you see, how it held the prices. So in this case, as long as it's above it, and this is my market side, this means that they will only sell it below the 90.45. So the 90.45 is going to be my stop, my long stop. And on the short side, as you can see here, take a look at the daily chart. You can see that this market held the 89.45, and you got 3 days here. You see those last 3 days? Those last 3 days, this is where the market has held. This is where the market has failed to trade below them. So based on that, there is no reason for us to go short unless it clears those lows. This is 89.17, 89.25, 89.24. So anywhere below 89.15, this is where we're going to go short, because we have seen it hasn't broken, so there's no point to sell it before 89.15. That's my short point. My structure is 88 right here. Any blue line like this is my structure, is 88. 88.98.4. That is my structural short point. And if I go short below 89.15, I really don't want to give it any more stop, any stop more than the, I'm going to give it about 10 pips above it. So if it breaks above it and it comes back above the 89.25, I'm going to get out of the trade. So again, as you see, I didn't take the short unless it breaks out the lows. Until then, I'm a buyer. I'm going to buy it above the high, and I'm placing my short, my long stop below the 90.45. And if I go short, I'm placing my stop right above my structure point, so I'm not going to give it much room. So these are the numbers. I'm going to go long above 90.85, and if I do, I have a structure point at 99.75, which means 100 pips away, and my stop is 90.45. On the short side, I'm going short below 89.15. My structural short is 88.94, and if I go short at 89.15, I'm risking only 10 pips on this trade, and I'm taking it to the downside. Okay, that is the dollar Swiss. Let me save this. Anybody has any question quickly?